Yes, here we are on that 1325 put that was marked at 2150 on the close yesterday. And here they're buying playing at 18. He just took these contracts 300, 250. All right, so where are we at? Are we on a 16 bid? So they're $2.40 wide. Come off the 16 bid, see what's behind it. Please, if you would. Thank you very much. There's a 1580 and a 1920. What a wide bid and ask. And you got to be a pro to get in here. Even the pros can't do what we do. We're market makers. I'll tell you what. Let's cut it. Go back to $16. Let's try to create a lower low from that 1750. And it's all about that entry with $3.40 wide. But how do you react to it? Ask yourself that question. And then, how do you make money from it? Ask yourself that question. Look at the $3.30 bid and ask range. Ask yourself that question. Let's get ready to make that market. Go ahead and pull that bid up to 1650. Let's try to do a 100 penny markdown below the low just to create a market. Just do whatever you want to do there. And let's try to contract it. See, if that 1890 keeps dropping, then we'll come off of here. But we're going to see if we can create a market 100 pennies or $1 below 1750. That's a $5 markdown to our wholesale entry. Once again, learning how to trade the S&P put options, how to steal that premium, and how do you react when they're $3 wide or $2.20 wide. And why do people get hosed? Look at the big people buying them at 18. Look at them, 300 contracts. They're paying the high price. Is the MMT? I don't think so. I don't think so. That's your so-called professional money and your smart money? Nah. This is live. It's truthful too. 1880 by 1650. All right, come off to 1650 and see if there's a wider gap. You got an S&P at 13.91, 1630 by $19, 1620 bid, 19 on that ask. Go ahead, there you got a 1610, 1880. As the ask drops, the bid drops. Go ahead, there's that 1590, 1590, 1580, 1580. And you're breaking out. I'll tell you what, go back at 1650. Let's see if we can get them to throw it. Go back. Make these people pay up. Let's control it. There it is, 1650. That's a 1650 by 19. Come up with that 1650. Come up with that 1650 and see if they're holding. They're holding 1630. See how we brought the market up, Mr. Plain? We walked them up there. Now go back to that 1670, 1670, 1670, 1670. Now we're making that market. We're controlling this market 1670 by 19. 1670 by 19. Take it down. Take it down in the bid. 1660. 1540 now. Pop him 16. Pop him 16 and see if he'll throw that. Make that $1.50 lower print. Here it is now, live right now. 25 minutes into the opening bell, getting this 1325 put. That they marked the premium down. They're still in the premium from the public, and we're going to buy it. Now come off of the 16 and see where he is. See where he is. 1490, give me 1550. Give me 1550. Give me 1550. There's 1510. I need to see 1550. There it is. There it is. $3 wide, $3.10 wide. SMF market makers on that bid of 1550. The big money was already paying up here at $19. 18 shaking, shaking, shaking on 250, 300 contracts. Here we are. Come up with that $15.53. Come up with that 1550. Now, let's burn that clutch and go to $16. Create that $1.50 lower print. Go ahead. Dow's up. Everything is up. Everything is going into resistances. Keep that there. It's $3 wide. If you want to be a pro in index making markets, go ahead and do your day trading option books. They don't teach you this. Keep that bid and ask out there. It's a 1630, 1950, 1650. No, you should not. But what you should do is throw a 17 print, which is still a markdown below the low by 50 pennies, just to create a knee jerk and keep that thing wide. Now go $17, $17. Go Go 5 at $17, 5 at $17. That's a 50-cent print down. And let's just go ahead and try to make it that volume. There it is. That's a $3 wide, 310 wide, 310 wide, 310 wide. Now that SMF market maker's in action. He's lined at 17 because he's buying 5 contracts. He throws over $3. That's $1,500 in capital risk savings on the freaking entry. Yes, it is. Yes, it is. Yes, it is. There it is. There it is. Learn how to trade index options. Learn how to steal the premium when they're stealing the premium. You want to learn how to get those lower bids and make these markets and get them to throw off to you. And I know darn well if you're watching the video, you don't know how to do it.